Ladies and gentlemen, good day and welcome to the Q1 FY23 earnings conference call of Panama Petrochem Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mahesh Narvedkar, Vice President, Corporate Relations. Thank you, and over to you, sir.
Thank you. Good morning, everyone. Welcome to Panama Petrochem Limited earnings conference call for Q1 ending 30th June 2022. I would like to begin by expressing my gratitude to all of you by taking our time to join us on this call. This conference call may contain some forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not guarantee of future performance and involve risk and uncertainty that are difficult to predict. I would like to introduce Mr. Hussain Rayani, Joint Managing Director, and Mr. Pramod Maheshwari, CFO, Panama Petrochem Limited. Now I request Mr. Hussain Rayani to share the Q1 performance overview of our company. Over to you, sir.
Thank you, Mahesh. A very good morning to everybody. It is my pleasure to welcome you all to the quarter ending June 2022 earnings conference call of Panama Petrochem Limited. Let me give you a little bit overview of the company about our products. We are into the manufacture of petroleum specialty products. We manufacture over 80 different variants of petroleum specialties, catering to about 6 to 7 different industrial segments. We have 4 manufacturing plants in India, and we entered into the manufacturing of our first overseas plant in UAE under the name Concall Industries, which is a 100% owned subsidiary of Panama Petrochem, with a total installed capacity of 240,000 metric tons. We are currently running on 100% capacity utilization at all our units, and we have a plan of continuously increasing our capacity in the coming years. This year we have a plan to add another 30,000 tons to our capacity, which will be commercialized in the second half of this year. Let me begin by giving an overview of the performance. The business environment, as you all know, is challenging with recessionary concerns. However, we have achieved stable performance in this quarter with good demand seen in our value-added offerings, enabling us to record good operating margins, which was at 15.8% during this quarter. Crude prices, though volatile, has been in range and helped the company to strategize procurement. Company has been successful in maintaining the net realizations on higher side during the quarter. Though we have witnessed good, stable demand across all product categories during the quarter, it is the value-added products that has stood apart. The expansion program is on due course, and we will see additional capacity going on stream in batches starting from second half of 2022-23. Now I request Mr. Mahesh Narvedkar to give the financial highlights.
Thank you, sir. On a consolidated basis in Q1 ending June 22, the operating income was 553 crores, which was approximately 8% growth over March 2022 quarter. Operating EBITDA reported was rupees 87.57 crores against rupees 72.17 crores in March 2022 quarter, a growth of around 21.3% there. Operating EBITDA margin stood at 15.8%, which was higher than 14.1% reported in March 2022 quarter. Net profit after tax grew approximately 15% over March 2022 quarter at rupees 64.58 crores. PAT margins reported at 11.7%. With this, we can now open the floor to question and answer sessions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Mr. Sudhir Beda from Right Time Consultancy. Please go ahead, sir.
Morning, Hussain sir, and congratulations for a good set of numbers, sir, given the volatile scenario.
Thank you, sir.
Sir, a couple of questions from my side. One is, as we see the results, I believe that there is a quarter-on-quarter decline in the volume and also year-in-year decline in volume because as price goes up, but our turnover remains constant. So that means volume might have gone down. That's what I believe. So can you provide some light on that?
Yes. So I would say that, yes, the environment was quite challenging in this quarter. As we've been seeing over the last 5 or 6 quarters, things have been very volatile. But I would say that the Indian market has been quite resilient. After the COVID restrictions were lifted, I personally feel that the Indian market bounced back very strongly. Currently, if you see in this quarter, in the first quarter of this year, our domestic sales, actually the volumes increased over the preceding quarter to 44,000 tons, 44,440 tons compared to 41,585 tons in the previous quarter on a standalone basis from our domestic sales. The UAE plant, the Panama industries there was a dip in the sales over there because of the global scenario. But overall, in this quarter, we have achieved a total volumes of about 57,220 tons, so which is slightly down from the preceding quarters because a lot of customers have postponed their uptake of orders. But we will catch up with in the coming quarters, in the coming months. They will lift their orders, so I think it will catch up in the coming quarters.
So do you still believe that given the additional capacities are coming, so still you believe that our volume can grow by 15 to 20% in this year?
Yes, we are quite optimistic looking at the forecast from our customers and the demand. We feel that there will be a 15 to 20%. We will be able to have a growth in the coming months. And
volume growth, right?
Volume growth.
And that's a great. And one more question: what would be the EBITDA given the now cost pressure is coming down? So what's the EBITDA outlook over there in the year 23?
Yeah. So in this quarter, the EBITDA on a consolidated basis was 15.8%. We firmly believe that we will be able to maintain our EBITDA margins between 13 to 16%.
So you are upping the guidance, right? You were constantly maintaining the 12 to 14. So now this range is up, right?
Yes.
That's a good news, sir.
Yes, because as you know, the strategy of the management is to continuously change product mix in favor of value-added products. We are seeing good demand for our value-added products from our customers. So we are quite optimistic to maintain the EBITDA margins.
Great. So, and sir, last question. Do you see now that exports picking up in the recent weeks or days?
So in this quarter, the export sales was about 132 crores compared to 113 crores in the previous quarter of March 2021-22. So there has been an increase in this quarter of our export sales, which now stands at about 43% of the total revenues. Even though I would say the domestic sales is outperforming due to the very resilient Indian markets. But in the coming quarters, we expect the exports to be maintained and increasing.
Great, sir. Great, sir. Thank you for giving the opportunity and all the best, sir.
Thank you very much for your kind words, sir. Thank you.
Thank you very much. We take the next question from the line of Mr. Dinesh, investor. Please go ahead, sir.
Good morning, sir. My name is Dinesh. I'm an Indian investor. My question is, hello?
Yeah, yes, Dinesh, I can hear you.
Question is on value-added products. What is the margin differential with regular products, and what is the contribution of value-added product in this product?
Yeah, so Dinesh, for your question, our margin differential for value-added products gives a margin of about 14 to 17% against regular products which is about 10 to 13%. Currently, the contribution from value-added products stands at around 67%.
Okay. Thank you, sir.
Yeah, thank you very much.
Thank you very much. We'll take the next question from the line of Mr. Naveen Goyal, investor. Please go ahead, sir.
Good morning, sir.
Good morning, Mr. Naveen.
Could you please guide us on revenues and operating margins in coming quarters? And one more thing, like how do you see a year forward from here? And we will be able to sustain the margins going forward?
Yeah, thanks, Naveen, for your question. Yes, we will be able to maintain a revenue growth of 15 to 20% in margins at current levels for this year. The domestic markets are quite resilient, and the demand has been encouraging in India, and India has been very far better placed compared to other markets.
Okay. Okay. Thank you for positive reply.
Thanks.
Thank you, Mr. Goyal. We take the next question from the line of Mr. Zulfikar Merchant. He's a retail investor. Please go ahead, sir.
Yeah. Morning, sir. Sir, I would like to ask one question. In the present scenario, has the company added any new markets in exports? And what are the challenges it's facing on exports?
Thank you, Mr. Zulfikar, for your question. The exports in this quarter was 132 crores compared to 113 crores in the previous quarter, an increase of 17%. The total exports stands in this quarter at 43% of the total revenues. We have been aggressively introducing our products into new and adding newer customers. The current geopolitical environment is causing numerous challenges, especially on the logistical part. However, we have been successfully working closely with the shipping lines to ensure timely deliveries to our customers.
Okay, thank you, sir. Thank you very much.
Thank you.
Thank you, Mr. Merchant. We take the next question from the line of Mr. Priyan Purohit from Kamaya Wealth Management. Please go ahead, sir.
Hi. So, sir, firstly, congratulations on a really great quarter. Super encouraging numbers.
Thank you.
So my question is, since we've been doing really great capacity utilizations of 100% plus, but the capex, the extra capacity that we're adding for the year is only about, if I calculate, it's about maybe 10 to 15% of existing capacity. So what is stopping us from, maybe pushing further and maybe increasing the capacity by say 50% or maybe doubling it over the next 2-3 years? So do you have any such further capex plans in place?
Yeah, thank you for your question. So we are currently running at over 100% capacity utilization, but our capacity is expandable about 15 to 20% over the installed capacity. This year we have already planned an addition of 30,000 tons to our existing capacity, and in the coming years we have further plans to increase about 30,000 tons per year each of the coming 2 or 3 years. We have a capex of about 100 crores which we have for this planned expansions all through our internal accruals. So as I said, the capacity is expandable about 15 to 20%, and looking at the growth, we are well on course with this addition of capacity, and we definitely evaluate after every 2 years, and with the situations thereon, we will definitely revise our capacity additions if required. So right now, for the next 2 or 3 years, we have sufficient additions to cater to the demand.
All right, understood, sir. And secondly, could you throw some light on this current capex that we're doing, the 30,000 metric tons? Is it all for your value-added products, or could you maybe share the mix there?
Yes, most of this addition is on the value-added products. Almost 70%.
All right, okay. Okay, and so my last question on the debt front. So I think in Q4 we'd already reduced our debt significantly to about some 30 odd crores. So any plan to go completely debt free in the coming quarters?
So so we are a completely debt-free company. We have short-term debts for the working capital, and it is only for the nominal working capital debt.
All right. Okay, sir. Understood. Thanks a lot.
Thank you, Mr. Purohit. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on your touchtone phone. We take the next question from the line of Mr. Rohan Mehta, investor. Please go ahead, sir.
Good morning, sir, and congratulations on good set of numbers.
Thank you very much.
Sir, I have 2 questions. Let me share the first one. Sir, how do you see the competition evolving in pre-pandemic era versus post-pandemic era? And why I'm asking this is because I have observed that many unorganized players, due to liquidity issues or supply problems, have shut down their shops. So, how do you see in this, and how is the competition in the organized space, basically? And the second one is regarding FX. So, what we have observed that during this last quarter itself, the FX markets were very volatile, and it was very uncertain that how the currency will move. So, how the company manage these FX transactions?
Yeah, thank you for your questions. Let me first answer your first question. Definitely, the pandemic has caused quite disruptions in trade. The unorganized markets are in difficult position, and due to this, a lot of business has got diverted from the unorganized segments to the organized segment. I would say still the supply chain disruptions exist due to the current geopolitical uncertainties, and the unorganized segments are still facing difficulties. However, for us, since we manufacture a range of products with a very diversified portfolio and customized solutions to our customer, we are very comfortably placed amongst the organized players. Regarding your second question, the FX markets has definitely been very volatile in this quarter. However, since we have about 45% of our sales from exports, we have a natural hedge of about 45% as our export proceeds are used for import payments, as both are in US dollars. And almost half of the balance open position we do forward contracts. So we are very well covered on the volatility from the forex markets.
Okay. Thank you very much, sir.
Sure.
And best of luck for the next quarter.
Thank you very much.
Thank you very much, sir. We take the next question from the line of Vivek Shah, investor. Please go ahead. Mr. Shah, your line is in talk mode, sir. Please go ahead with your question.
Yeah. Hello. Yeah, very good morning, sir. And congratulations for the good sets of numbers.
Thank you.
I wanted to ask about the expansion plan of the company in progress and how much quantity will be added in the current year and when will this be commercialized?
Yes. So our current installed capacity is 240,000 tons on a consolidated basis. This year we will be adding another 30,000 tons on this, which will be commercialized in the second half of this year. Going forward, we have a plan for the next 3 years to add 30,000 tons additional capacity year on year, all of which will be through our internal accruals.
Okay, sir. Thank you.
Thank you, Mr. Shah. We take the next question from the line of Mr. Shankar Tari, investor. Please go ahead, sir.
Good morning, sir.
Good morning.
I'm calling from Mumbai. My name is Shankar. I want to ask one question. My question is, world market are in price inflationary scenario. Is there any impact in our business segment?
Yes. So thank you, Shankar, for your question. There have been cost escalations due to the inflationary scenario, especially in terms of the freight cost and other allied and accessories, inputs and service costs. But we have our general trade term is a pass-on mechanism of prices to our customers, where we have a monthly pricing with our customers. So any such increase in our cost are passed on to our customers, thus mitigating these costs to a certain extent.
Okay, thank you, sir.
Thank you, sir. We take the next question from the line of Kalpesh Parekh from JSN Advisory. Please go ahead, sir.
Yeah, good morning, sir, and heartiest congratulations on good set of numbers. Sir, couple of questions. One on, you mentioned the domestic business was quite very well. So in the sense, like, can we get a picture on which segment was much better or which segment fared much better, like inks or probably the pharma space or rubber or textile, or all were doing very good? How was the scenario?
Sure. Thank you, Mr. Kalpesh, for your question. So the Indian market is definitely well better placed compared to other markets, and we have seen some good demand from the segments, especially from the inks and the coating industry and the rubber industry, and also a pickup in the cosmetics and the pharmaceutical segment. We would say the textile industries were quite stagnant, but overall, since we are covering about 6 to 7 different segments, so overall we see a good demand. If some segments are running slow, the others are running quite good. So I would say generally the ink and the rubber would be the outperformers.
Okay. Sir, my second question was linked to this first question only. Like you mentioned, in the second half we will have this extra, incremental capacity coming in. So in that scenario, do you foresee a scenario where demand will outstrip your production capacity, and we might have to run the plant above 100% capacity?
Thanks, Mr. Kalpesh. Yeah, so as I said, our capacity is about 15 to 20% expandable over the installed capacity. In addition, we are adding another 30,000 tons to our capacity. So looking at the forecast of the demand from our customers, we are very well covered for this year to cater the increasing demand. And I think this would suffice for this year, considering that a lot of our production products are fungible and also expandable over the installed capacity. So we will be able to cater the increasing demands from the customer.
Sure, sir, sure. I'm quite confident that probably we should be able to deliver on the capacity front. The last question was on the margin front. We did extraordinarily good 15.8% in this quarter. So, but still your margin guidance is still hovering in the band of 13 to 16. I understand you wanted to portray some conservativeness over there. But nevertheless, sir, you foresee the scenario where at least we can extrapolate in the band of 15 to 16% or even above 16%?
Yes, yeah, it's possible, because as I said, there is a steady shift in our product mix for more of value-added products. In the coming quarters and the coming years, we have plans to further increase our value-added products, which we've been doing over the past couple of years, and we want to continue on that front. And the value-added products definitely offer and give us a better realization and better margins. So going forward, we are quite upbeat on the margin side and to maintain it on the current levels.
Okay. Wish you all the best, sir.
Thank you. Thank you.
Thank you.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. We take the next question. This is a follow-up question from the line of Sudhir Beda from Right Time Consultancy. Please go ahead, sir.
Yeah, thank you, sir, for giving me the opportunity again.
Thank you.
Sir, just want to ask the accounting question. Foreign exchange gain of around 10 crore, is it part of the normal business or it is, and it's just accounting standard for which we have to account this, or it's something extraordinary which will not recur?
So this is the accounting standards and is a notional loss, because as per the accounting standards we have to revalue our inventory as per the current. We have to revalue our creditors as per the existing exchange rate. But this is realized during the time of actual sales. So this is a notional loss which will be realized at the time of actual sales.
In fact, it is a gain, I believe.
There's a
10 crore. 10 crore loss. And inventory gain, we have built up anything?
Was that?
In this quarter, there was an inventory gain this quarter as price has moved substantially from the March level.
No inventory gain.
So there was no inventory gain. So it's all profit or EBITDA which we are showing is just a normal course of business, right?
Normal course, yes.
Yeah, thank you very much, sir, and all the best.
Thank you very much.
Thank you, sir. We take the next follow-up question from the line of Priyan Purohit. Please go ahead, sir.
Hi, thanks for taking my question again. So just wanted to get some more clarity on your value-added products, since essentially, you've been able to increase your margins because of that. So if I notice, all your peers have sort of faced RM pressure and their margins have gone down, whereas we've actually been able to expand. So I just wanted to understand whether do we have any special position in terms of market share in these extra value-added products? Say, for example, maybe are we the only manufacturer of a particular type of petroleum jelly or white oil in India or something like that?
Yes. So we do a lot of customized solutions for our customers and a lot of import substitutes. So a lot of our customers, especially in the segments of inks and ink manufacturing, or in the rubber industry or in the textile industry, we make products based on customers' specifications, requirements, process, and exactly as per their requirements. So these are very tailor-made products where there is much less competition, and we can pass on a higher price due to this. A lot of our customers who are in multinationals, they otherwise import these products from either Europe or other Western countries. So we give them a solution with a just-in-time delivery equivalent to these products to these grades that they require. So these are very custom-made, and we are very well positioned to supply them because we have been approved by them. Our plants are audited by them. So we are much well ahead of the curve and very well placed to service them with these products.
All right, understood. So that really gives a lot of clarity. So my second question is on the front of your product pricing. So essentially the way I understand it, since we are already running at almost full capacity, so I imagine there won't be a lot of headroom in terms of volume growth until the new capacity comes in. So how do you exactly see your product pricing going forward? Do you expect to get better realizations in the coming quarters?
Yeah, so as I said, in the second half of this year, we will have additional capacities which will be commercialized. And so we are currently well placed because we have a yearly forecast from our customers wherein we evaluate the demand from them. And based on that, we have projections to add capacity for this year and the coming years. In even though we are running on 100%, we can further increase our capacity by another 15 to 20%. So we are very well positioned to cater the increasing demand.
Okay. All right. And sir, just one last question from my side. So just to reiterate your guidance for FY23, you had said that we should be able to comfortably get a 15 to 20% top line growth. So if I just do a rough calculation, we probably need to achieve a quarterly run rate of about 600 to 650 crores of revenue. So are we on track to do that then for the coming year? For the coming quarters?
Yeah, so as I said, we are confident and quite optimistic to have a 15 to 20% growth in revenues for the coming quarters.
All right, understood. Thanks a lot, sir, and all the very best for the quarter.
Thank you very much.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Hussain Rayani for closing comments. Over to you, sir.
Thank you, everyone. I would like to thank everyone who has participated in this call. For any further queries or information, please get in touch with our investor relation team, and we will be very happy to answer them. Thank you very much once again.
Thank you. Ladies and gentlemen, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.